Hello, YouTube. Hello, Twitter. Again, my name is Nick. We are simplestocks.com. I have a very special guest today. Some of you know him. A lot of you know him. His name is Raghu. He is a hedge fund all by himself. We call him a ninja because if you see him, the trades he sets up and how actively he is setting up the trades, you too would give him the ninja label. What we do, if you don't know already, we are a group that trades together all day, every day. I moderate the room. We have about 160 people to 165 that are live actively all day, every day. We have a few hundreds more, but we rotate. Not everybody's on at the same time. They have a life, of course. Me, I don't have a life. So I give you 10 hours of my day at least. I start streaming at 4:30 a.m., 5 o'clock my time, and we don't quit until the action quits. And part of also what we do is make sure that the home gamers, retail investors, trade as well as fully accomplished hedgers. So we don't want to be sheep. We don't want to be followers of the news. You would end up at best being mediocre. That would be your goal. So that's what we do. Our goal is to get that done for everybody and at in a reasonable way. Like it's available. They don't need special equipment to just log in. So today I'm going to open it up with a quick rundown as to what the market is doing, um, and then open the floor for Raghu because he's got a ton of homework and he worked hard at cutting it down to something manageable in time so we don't spend the next 2 hours here. Markets are super high, and I've heard some people call it a bubble. Raghu and I agree it is not a bubble. So I'm looking for a topping formation, which means we're closer to a top than a bottom. So going long or staying long with confidence is kind of scary proposition. So that's one thing. Okay. So where's the problem, Nick? Why don't we just stay long? How do you hedge? How do you stay long? You can stay long with confidence if you have a backup plan. What's my plan B? Okay, if the market drops with a shock, what happens to me? That's where people hedge. So it's expensive, right? It gets in the way. It's expensive. Believe it or not, there are ways you can hedge for free, maybe even for a credit. The point is, how do I protect my account but make somebody else pay for it? Who? Somebody who doesn't do what we do. We don't mind buying stuff to control our drop potential, but we don't want to pay for it or have somebody finance it for us. So that's the concept. I will hand it over to Raghu. Before we go on, before I do that, I'm going to tell you that we do have an in-person event in October, on October 3rd and 4th in LA, to take that concept and do a deep dive for 2 days. And there are probably a dozen other topics that we cover during those 2 days. Raghu is the principal part, giving the information and the resources, and we also have a cool announcement at the end for that as well, as far as giveaways for that event. So make it a goal to listen to what he has, to give you the confidence that he knows that the information works, and give you something to take away regardless of whether you sign up or not. And I'm going to level up the offering throughout this. So Raghu, this is yours.
Perfect.
There we go. I'm going to go in the background. I'm going to mute my mic and I'm going to look at your comments and try to moderate this.
Perfect. Hey, thanks a lot, Nick. Hey, it has been it is wonderful having you all in this particular special episode that we are having with regard to where we are on the market. We are at a very critical juncture. But before we get deeper into that, right, I wanted to actually bring out. We all know that there is this Fed news that is coming out of Jackson Hole. So, how many of you must have heard about these terms, irrational exuberance or transitory? They were made famous by two of the most famous Fed heads. Irrational exuberance was during the dot com boom, where the markets were at literally all time highs. And Alan Greenspan, he primarily in his speech may have warned that stock market might be overvalued because of excessive confidence. Okay, and as he was rightly pointed out, there was a massive crash. For those of you, in fact, at that time, I still remember I was not a very active trader, but I was an investor, and I didn't know much about hedging. So, but the lucky part was that I was invested for the long term. So I didn't really panic and then do something that would have created more problems for me. But whatever were the short term options that were there in the account and things like that, of course, took a hit. Okay. Had I known about hedging, things could have been different. Similarly, recently, I think most of us know about what Jerome Powell is famous for. He used the word transitory that he used for inflation. We know that inflation was going up because of COVID, and he kept the interest rates low, pumped a lot more money than what was needed by the market, and that led to significantly higher inflation where they had to put the brakes on, and that led to a market drop. I wouldn't call it as a crash, but it is more of a significant drop. Okay, so these are two contrasting aspects that I want to bring as a background as we think in terms of going forward, whether the current market is irrational or whether it is just a transitory thing where we are at the all-time highs and then we are just going to drop again. Okay, so let's take a look at S&P and Nasdaq over the last 1 year. So what you see on the screen is we have had a steady trending higher pricing on a very tight range, okay, over the last few months. Okay, this is a pretty bullish picture, and what all this is surprising is, in spite of all the negative news that keeps flowing, okay, politics is playing a big part of it. We keep getting these tweets. There is headlines. I like to draw the analogy of how you should be thinking about. So for those of you who have been to any safari, like in Africa, for example, you'll notice that there are a lot of wildebeests and zebras and deer and things like that that are typically grazing in the wide fields, and suddenly there is something that happens in one corner of the forest and then all of them run towards it. Okay, either there is a sound or there is a thunderstorm where there is a flash, and they all run in one way. And this is where the lions and the cheetahs, they are patiently lying in wait for these sheep and the herd to run in one direction without thinking. They pounce and then they get their meal for the day. Okay, what you really want to think about is, you don't want to run like the sheep, you don't want to be following the sheep, you want to be like the cheetah or the lion, and be prepared for those times when you actually can grab when there is blood on the street, for example. Okay, so politics play a big role, as I said. The fact is that the negativity that we are getting on almost on a daily or a weekly basis is not enough to interrupt the uptrend that we are currently having. Yeah, you would have also heard the term that there is this uh, wall of worry that people are climbing. Yeah, to a certain extent, yes. Okay, now let's dig a little bit deeper. It's all based on the speculation about whether there is going to be a cut that the Fed is going to have. Market is still expecting about 3 cuts, and in some cases 4 cuts before end of the year. I think it is a little bit too premature to think about that many cuts, given the fact that we don't know whether there is inflation is controlled or not. Like, take for example the next Fed meeting. We started with literally a 0% chance of a cut in February. In September, we went all the way to a 90% or 85% odds of a September cut. We dropped back again in May, and then we went back up again. We dropped back down, and now we are at a 85-90% chance, all based on headlines and some suspect data to a certain extent. Okay, that is coming on, and we may know in the next couple of days when Jay Powell is going to speak at the Jackson Hole what is their thinking. Okay, so let's see where this leads to, but that shouldn't, and all this up back and forth can get to ultimately impacting your portfolio and impacting your trading activities. Okay, I don't know how many of you know of what is called as the commitment of traders. Now, as professional traders, one of the things that we do is, I have to keep hedging on a continuous basis if I'm net long or net short. Okay, so that I don't blow up my account. And every week CBOE publishes a report on all the futures that are either net long or net short. This is just a snapshot of it. And if you look at it, commercial hedgers are people who actually are on the other side of the trade. For example, if you buy stock, let's say you go long Amazon, someone has to sell it to you. Okay. And most of the time, it is a trader who is trading on Amazon. Now, they may have Amazon stock readily available in their portfolio or readily available in their inventory, in which case they sell. But more often than not, they just sell because they are in the business, and to ensure that they are selling short, they will be short Amazon. To ensure that they don't actually have a negative position, they look at their total portfolio. They may be short Amazon, they may be long Microsoft, they may be long something else, they may be short Tesla. They look at it and then they either go net long or net short a futures contract, which is either supporting S&P or Nasdaq or something like that. This tells you what is the position of all the traders at any point of time, what is the net position, and why is this important. Like, for example, take a look at what happened to Bitcoin in the last week. Okay, and there's a reason for that. Bitcoin was at all-time highs about a month ago, but then last week, this is as of last week, commercial hedgers, they unwound their contracts from their net long position. That means they were selling. Okay, and when they sold, and you're really talking about 1,000 contracts of Bitcoin futures, which is a huge position, by the way. Okay, that is what results in they are unwinding that, and when they unwind that, it's all going to come down to the market, because ultimately what happens, Bitcoin gets sold because somewhere down the line someone is holding the bag. Okay, and what we want to make sure is that you don't want to be the one holding the bag. Okay, folks, if you have any questions, feel free to ask. Nick can interrupt me and then I can definitely answer as we go along. I have about 10 slides to cover. Okay, so let's look at, Nick mentioned about this. Are we in a bubble or not? Yes, we are near all-time highs, but this is actually a Goldman Sachs research report that is there, where it talks about there is an indicator that they follow, which is the speculative trading indicator. The speculative trading indicator was at the highest during the dot-com bubble, and it reached the same level, which was 200 plus, during the COVID time frame, due to the amount of money that got infused into the economy. Right now, we are at this particular level. Okay, so we are at, the bull market that we are in is about 12 years old. Stock valuations definitely are not as cheap, but relative to these two times when it was highly speculative, we are not in a bubble. And let's see why we are not in a bubble, and let's look at it. Let's take a look at S&P. And this data is as of today, as of close of yesterday is when the data was pulled. So what does this chart tell you? Okay, so while the market, for all of us, we may think that the market is really at all-time highs. So, if you ask anyone, if you know how S&P has done over the last few years, typically on an average, S&P is up about 18 to 20% a year. So you might think that, if we are at all-time highs, S&P this year might have done definitely in the teens. Contrary to that belief, right? The reality is that S&P is up only 4.4% over the last 6 months since the beginning of the year. Okay. During this time, think about it. S&P has gone, we had a 19% decline and we had a 28% rally. Okay. It is this that is recent memory, which is what we think S&P is at all-time highs, and we may think that it is definitely gone up by about 20 or 25%, but in reality it is only 4%, because if you take this drop out, so the worst case scenario is someone panicking and then selling their positions here and then buying it back right now. That's the worst case scenario. Okay, but if you are looking at the long term, now this particular chart, it does a little bit, it includes a little bit of
So let me butt in here.
yep.
That is an important point. What he just said. The worst case scenario is if you sold at the wrong time and are rebuying at the wrong time. And that's the goal of this whole idea of how
Mhm.
do we hedge. So if those people were well hedged, they wouldn't have sold anything. They would have just survived the drop, made money on top of it, and it would not cost them a nickel. Just remember that. I'll give that back to Raghu
Yep.
because that's a critical point that you will have to make a decision on.
Perfect.
Am I going to be part of this group that
That's right.
panics out and then buys in like a sheep, or am I going to have my own solid way of hedging regardless of levels and not lose my lunch as soon as I see a few red ticks?
So let's look at this chart, right? This chart is actually a very good chart because what it does is this. So if you look at it, there is this black line, which is the actual as of today, as of yesterday's close, in fact, and the orange line. This actually it predicts where S&P is going to go, and how it does the prediction is it takes into account in the last 10, 20 years, it looks at the chart patterns every time a chart pattern is similar to this particular pattern, okay, and how it went after that. So it tells and it gives a score to each one. So like for example, in 2024 March, we had a score of 91, okay. So the chart pattern was very similar in 2024, just 1 year ago, okay. 2020 2003 87% score. So similarly you have all these scores, so it takes all these into account, the total 10 of them, and it predicts. And what it is telling based on this is that S&P is estimated to be 10% higher 6 months later and positive 100% of the time. Look at this. In each of these time, it is positive. Okay. Now let's dig a little bit deeper because what I want to do is I want to remove all the outliers. Okay. So what I did is I actually looked at just the ones where it was above 80%, the score. Okay, there were just three of them, one in 2019, 2003, and 2024. And if you look at that and if you map it, so the orange is based on those consolidated three, how it goes, how it went, and how it can potentially go in the next few months. So what it tells us that the probability of having a sideways consolidation mode is there for the next couple of months, and then we will go into a upswing. Okay, so this is a very high probability model. So where even in this case, like compared to this, like in this case also 6 months later it is 9.84%, and in the previous one, look at it, 10.94%.
Ragu. So let me bump in here because I know some of this stuff is a little bit in the weeds.
Mm-hmm.
So let's circle back as to what was said here.
Yep.
We started this webinar here by saying, okay, we are at all-time highs and we have a conundrum. We
Mm-hmm.
don't have a bubble that you can measure from the valuations because the large companies are doing well.
Yep.
So what's the problem? The problem is I can't start new longs with confidence. I
Mm-hmm.
can't stay long with confidence because of all these misconceptions, or some people be looking at panicking out and we get these sharp April drops, and that would be very painful. So what Ragu is telling you now, that using historical data and using models that give you all these percentages looking forward, he's saying that we're not overbought. That's why we're only up a little bit on the year, even though we feel like it. And the math, the AI is telling you that looking forward, we could have another 10% drift higher based on the correlation data between what's going on now and periods in the past that look just like now. So that's the whole thing. So he just gave you all the backup data to say exactly that. So everybody is in the same bucket. Everybody wants to be long. Nobody wants to miss out.
Mm-hmm.
But everybody's taking a big risk because we have so much feeling involved. So in order to neutralize that, you need to put guardrails. You need to put protection in place. But you don't want to pay. It's very expensive to just buy insurance. So that's the whole thing. So he can do this, and we can show you how to do this if you sign up for October, and it's 2 days. So there's plenty of time to get it done. And I don't know if I mentioned this yet, but I will now. If you commit to sign up, and I'll give you a link in a minute, I will commit to you for Saturday sessions for a month to get you ready for that. And on top of it, you will be able to, if you sign up today, for example, you will be able to trade with us tomorrow, all day, every day, until the end of October. And on top of it, you will have access to the Discord, which has more experts in there and AI trade alerts from now, from when you sign up until the end of October. Okay, so there's still more giveaways in the end. So stick around. I'm going to put the link in here and hand it back over to Raghu. Sorry to derail you, but I think I needed to bring it
Perfect,
and put it in
perfect,
plain
perfect. In
speaking
fact,
English.
I'm going to anyway. Uh, I'm going to add to your thunder. Okay. So let's take one more cut at it. Okay. So the technical picture. Okay. So these are what you see here are some of the proprietary indicators that are there, which I follow personally. For those of you who are on Discord, you must have noticed that I do post this pretty frequently. There is an indicator that I use from recessionalert.com. It is the big top indicator, which is basically it predicts the probability of a market top. Okay. So this chart, this is as of yesterday. Okay. It tells you, so you really need to look at the bottom part of it. Okay. This is S&P 500, the blue line. The bottom part of it, what I look for is a divergence. We still haven't hit the divergence yet. Okay. This is the time when there is a real market top. So look at the last few times where the divergence was triggering and then the market dropped. Look at this. The divergence triggered here and then the market dropped. Okay. Um, Let me go back there. Okay. So we still don't have the divergence yet. We still have a little bit more leeway to go up or sideways. But we are very near to a market top, which is basically saying we are at a 92% probability. And for this is like an early warning system. Think about it as when a storm is approaching, you can get to see, hey, you know what? We need to be prepared. Doesn't mean that you need to put your mind into putting your money in for preparedness, but just be prepared. Okay. You don't want to buy insurance when the storm is already hit. Okay. Just be aware of that. Okay. You want to be prepared now. I correlate it with another proprietary indicator from another firm that actually does it for NASDAQ, which is for technology related companies. So there are two bands that we see here. So here currently, this is QQQ. It is in an uptrend. This is a weekly candle. What I look for is you see this red band. It is not, it is a moving average, but it is a combination of multiple things. Whenever this weekly candle touches or closes or goes below the red band is when I entire portfolio gets hedged. Okay, that is my complete trigger. When it is in between these two bands, and correlating with something like this, I try to be prepared, maybe hedge about 20% or 30%. But when it is going below here, I am fully hedged. Okay. So let's talk a little bit about what is hedging. And this is where I think many people sometimes don't even know whether it is something that they should do. If you are in the market, I think you have risk unless you have a portfolio that is already managed with some kind of a guarantee. You have a risk. So hedging is basically nothing but it's a risk management strategy where your hedge will involve offsetting positions. So let's see what it is. So let's say at a very basic level, if I'm long Nasdaq with various stocks, okay, worth $1 million, if I have to be fully protected, I have to hedge for 1 million. So I buy a insurance for 1 million. It's similar to an umbrella insurance that you may buy. Okay. So what happens is, just like insurance, if the market keeps going up, your portfolio is going to increase in value. You don't need to have the insurance. Your insurance is a cost. Okay. You tear up that paper at the end of the insurance term and you're done. Your portfolio is still better than what it was without the insurance. God forbid if there is a market drop, then the value of your insurance kicks in and compensates for the drop in the portfolio value. So that is what is a hedge in a very simple term. So you can hedge your portfolio, you can hedge specific sectors, you can hedge specific stocks, you can do all of these. We will cover all that. So hedging is like insurance. There is always a cost involved because there is someone who's insuring, there's someone who's taking the risk from you. But there are certain strategies that you can do with some level of planning where you can hedge for a very low cost. And one of the things that I will also be sharing in the event, in the futures event, is there are a few strategies that are there where you get paid to be hedged. So literally, you are going to get paid, and Yes, when you get paid to be hedge, that means you can ask, okay, there is no free lunch. Yes, of course, there is no free lunch. What are you taking is the probability of you paying for that particular hedge is very low. And that is what we talk about. Okay.
Okay, so this is where I get excited. So I this is my thing. I don't like to buy anything. I like to sell and net. I'm a net seller of things. So let's say this again slowly. There's a way to buy insurance and have somebody else pay for it. So not only is the insurance can be low in cost, it can actually be a credit. So you will the transactions that you will do to cover the drop. So if we drop 20%, and you end up getting paid something. So you send the orders in, credit goes into your account. Just chew on that comment for a second. So I'm going to take that statement and flip it on its head, upside down. So if we use that same logic, you can also decide to short something and end up with a credit. And we're not talking about a credit call spread or anything, just a structure, the same similar idea. So basically, there are so many combinations you can do, but you need it's like if it was easy, we wouldn't be spending some time trying to convince you to come learn it in person. Everybody would be doing it. Say, oh, this is how it is. They read a book and they go do it. Don't do that. You're gonna get hurt. You need to learn everything there is, and and then some. So I did hear Raghu say indicator or something like that. So is there any chance, Raghu, that you're sharing any indicators during that event in October
So
3rd and 4th?
there are a few indicators that I will share. Some of them are so powerful that you don't need any other indicators to trade, not just for futures, but also for stocks or options or any of those that you're using. So I can, you want me to give you a,
So let me wait.
yeah,
These are I can use them to trade like fast intraday or swing trades. What kind of
mhm,
trades?
yeah, you can. So let me
No.
show you. Hold on. Let me
Yeah, yeah,
see
go
here.
ahead. So did you hear that? So he has actually I knew the answer to that question. I kind of cheated. I've seen them. Pretty powerful indicators and they are proprietary. So you can't even just go buy them. But you only need need a few when the few you use are very powerful. So let's just say if you're good at trading or you have inconsistent results, that's because you probably don't have a method. So he will hand you um, indicators, and then he will show you a method on how to use his indicators. So I'm going to stay in the background and shut up and let him talk.
Ah, there you go. Okay. So this is one of the indicator and all it does. So here, let me show you typically what I look for. So here is a daily chart and this is S&P. 3 days back, 4 days back, it told that there is a reversal. Had you gone short of S&P at that time, you would have been making a lot. And think about it. Way back in April, when was this? April 8th or 9th. For those of you who were on Discord, you would remember
Oh yeah, we remember that day. Oh yeah.
I said the bottom is in.
Hey, let's not go there.
Okay, so there you go. So where I got that information is right here.
Okay, so check it out. Look at the screen. Let's stop talking for a minute. Look at the
Okay,
screen. Look how simple it is. Just one
so
box.
once you
Go.
go along, it's all you would be exiting here. So look at it. How many points you are talking about? 5,100
Woo.
to 6,395, 6,400. Okay. Now you may ask, okay, is this only for daily chart? Okay, forget about daily charts. I'm going to a 15-minute. This today. Okay, today, right around 8 a.m., which was about 1.5 hours after the market opened. Okay, I am in Pacific Standard, so 8 a.m. is about 1.5 hours. We had a reversal trigger. Okay, and where did we close? The reversal was triggered at 63.63. It closed at 60, around 6,400, 63.95. Okay, in fact, we have a reversal on the bearish for start tomorrow, but we will have to wait until tomorrow. I wouldn't go with the SPX on this reversal at the end of the day. Okay.
So let's put it in dollar terms.
Yeah.
If 63, that's like 40 points. I'm doing air math. 40 points. If you trade the futures, you know exactly how much money that is per contract. If you bought a call, you know how much money that is. In if you trade options, if you buy actual stock, you know how much money that is. And that's just one day, one trade. And the swing that he showed you from the April lows until now, it was very simple. I only saw two boxes, one to go long and one just a few days ago to go short. Um, just forget the knowledge he's going to impart in October. Just imagine what you can do with that kind of tool. It doesn't take a genius to use it, and it has some companion things to go along with that as well. So back
So
to
let
you.
me add one more thing, Nick. Some people may say, hey, you know what, I don't know what a reversal is, I don't know what to do, and I'm confused. So I go to the next level where you don't even need to do anything. You just need to know when to buy and sell. Think about this. So you are going to get this one. It tells you, okay, so let me, at specific times, okay, so this is again, if it is a daily chart, yesterday was a day to sell, okay, and you could have bought on August 8th, 6300, 150 points, okay. It tells you exactly when to buy and when to sell, and you can do this for even a shorter time frame, like this is a 15-minute. By the way, this is an Ichimoku cloud. If it pierces through this, man, this is damn bullish, okay. So think about it. This is today. Today, if you are a day trader, it gives you signals to buy and sell right through the day. This is on a 15-minute chart. Think about how many signals you're going to get on a shorter time frame. I normally don't recommend shorter time frames, but these are the two of the sample indicators I'm talking about that I typically use for futures trading. For example, you will get this when you come for the event in LA. Okay.
Right on.
So let me switch back to the. I have just a few more slides, and then we can go
Yep.
into.
Forget the dead space. We'll give you Nick's screen while he's doing it.
There you go.
You're ready? Okay. There we go.
All right. So we'll cover some of these strategies, and then finally, what I wanted to close out is with giving a little bit of an outlook of where we are. Typically, Q3 is a consolidation time. It is the late summer, and most of the time during this month and the next month, you are going to see sideways action to a large extent, and that is what we are starting to see right now. But despite all this turbulence, right, Q4 is going to be really good, is at least what the markets are indicating. At least this is what even the companies who have reported are indicating. Potential Q3 pullback will get bought. The buy the dip will continue to exist because most of the large companies that have reported, most of the companies, the corporate earnings have remained strong. Okay. Um, and on top of it, if we get a few rate cuts, maybe one, maybe two, we don't know, that is going to boost corporate earnings. That is going to lower the borrowing costs. And that should spur the economic growth, which will generally lift the entire market. The tide will be lifted. The biggest wild card, of course, is that we have the tariffs. It's still a sword hanging on top of everything. The real key is this is where being selective is very important because someone is going to be holding the cost. It could be the producers or it could be the consumers, or worst comes to worst, they can also be the middlemen. Okay, like for instance, you have the Costco's of the world, the retailers, you have Amazon, all of them. Okay, so uh, being selective on which companies to be a part of your portfolio are the ones where you want to be holding companies that have price advantage, that are able to withstand any kind of shocks, be in industries where there is a significant amount of growth, okay, and that should tide you through. So being selective is very critical. Okay, as I said, like Stephen Covey's message is what I put up there. If the ladder is not leaning against the right wall, every step you take will take us to the wrong place faster. Okay, so you want to be on the right place and make sure you get to the right of the top of the building. Okay, so any questions? So Nick, take the floor and see if you can look at if there's been any interesting questions that
Yeah,
people
yeah,
have.
yeah. No, I don't have. I did have a couple questions that I answered in person in the chat. Let's see here. I know there are some questions, and some people have hesitations. Like you see this, if you don't know us, you're on X or on YouTube, and you don't know us, and you say, "Okay, who are these people?" Just to let you know that we are the real deal. We do this live every day. So after one day in our room, I know you're convinced that we're not blowing smoke. So in case you're on the fence, or if you do have follow up questions, I cleared up my schedules on Saturdays for a month in order to get the right people in the right spot. So here's what I'm going to tell you. I do have a form that you can fill out. And what you can do with that form is tell me who you are, give me an email so I know you're a real person, not a troll out there, and I will invite you for a special exclusive Saturday session. I don't know if if you will be in this Saturday or next Saturday, but it'll be convenient for anybody to attend, and I'll answer your questions live. And if you do sign up, we will use those sessions in order to get you ready for the October event. But more importantly, I think what I want to do. What time is it? Okay, so I'm going to do it now. What I will also do, I will give you a pass to join us in the live room so that you get to know us. I know X has a good reach, so we have 260 people, 270 people watching now. Some of us are our people. Thank you for being here. We appreciate your support. But if you don't know us, that's the only way you can get to know us. Fill out the form. I don't ask for your firstborn, just your name, real name, please, and an email. I will reach out to you. I'll give you the passcode and the link to join us live. You don't have to say a thing. You can just sit there and watch us. And once you get comfortable, we can continue to be in contact that way. Don't let this opportunity go by. The room we can take in as many nice people in the room. If you're a jerk, stay away. If you really want to progress in life and be a better trader, um, reach out. So let's recap what just happened today. We raised the flag. It's like, oh, there might be something wrong. There's a 90% chance we're at the top. That's what the data said from Ragu earlier. But we also said, don't worry about it. You can stay long. You can still start longs in or get bullish on some things that you're interested in, especially on these dips. Like today, we sent out a trade on Palantir. Even though I can't stand the valuation, I still sent out a trade to go long Palantir in a very safe way. And so we offered solutions. We can hedge the account, among other things. We even offered the idea that if you join us, we will show you ways to make money and give you tools, thousands of dollars worth of tools. They're proprietary, so you can't put a dollar amount, but I can tell you, I've paid $1,000 and $2,000 for any of those tools, and you're going to get more than one. And to take it another step, I'm inviting you to join us, no expense to you. Spend a few days, all day if you want to, and then Saturdays to get more comfortable. We want good people. We don't want anybody. We just want good people who want to do good things. And we are, by the way, I'm not from Wall Street, neither is he. He's a corporate guy who climbed the corporate ladder, big companies. Trust me, you're trading their stocks right now. And I'm a corporate guy who jumped into entrepreneurship a while back and never looked back. Engineer background for me, him more business and running businesses. So we've been in your shoes. Okay, we've been in shoes. The one thing I can tell you shouldn't do for the rest of your life is trade alone, and we have a solution for that too. So let's get going here. If you don't have any more questions, we kept you enough. It's 45 minutes in. We'll wind it down with questions if you have them. If not, we will bid you adieu. Sign up or send me your information so we can continue this conversation offline. I know some of you are curious. So, questions, anyone? On YouTube? Nope, just praises. Thank you, people. I love you. On X, no questions. I know there's a 20-second delay, so I'll wait. Do you know how to dance, Ragu? Oh, he's gone off the screen.
You want to kick people out?
Where'd you go? He went and hid. I'm gonna I'm gonna get you out of there. Whoop, where we go? It's either him or me. You're welcome, Velo. Velo, for example, this person that just commented on X, he shares a couple of trades a day. Very chill trades. At least a couple of trades a day. Very chilled. So just one of many that contribute. We have fast traders, we have slow traders, we have colorful personalities, and everybody's contributing. I promise you, if you come trade in a group, you will never stop. Where is the form? I pasted it. No? Oh, I didn't give it to you on YouTube. I'm sorry. Here.